Hey everyone, welcome back. Just a quick sound check and then we can get started. Okay, sound seems to be good on my side, so just a quick general advice and risk warning disclaimer before we start. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay. Alright, let's just jump in. Good evening. Welcome. So, got questions that I can actually read up front. Let me see if I can scroll back up a little bit. Alright, could you explain one more time what would happen if Bank of England keeps buying their bond, and do you think are they still being wishy-washy? No, the Bank of England pretty much ended their bond buying program last Friday, so we really have a lot of stuff to talk about. What's going on in the UK? We've got the CPI number that was out today that was higher than expected. It was 10.1%. Let me just adjust my camera a little bit. Okay. So yeah, next question is, we want to open swing position on pound or maybe any other US pair. How far out are the stop losses? Because I'm expecting a pullback after the Bank of Japan if they interfere. We will talk about that. We will take a look at that. Range is kind of stabilizing right now. I mean, if we take a look at the pound USD here, we will talk about the gold as well, so not to worry about it. But let's talk about pound USD and let's talk about what's really going on with the CPI numbers. The CPI numbers was 10.1%. Expectation was 10%. That was obviously above market expectation. The core CPI at 6.5%. That's really this is pretty much the highest level in I think about 40 years. Partly driven by food prices. So let's talk a little bit about the CPI numbers. Now, if we take a look at the CPI numbers, it's really high. The expectation is actually the supposed expectation is actually for the Bank of England to actually hike a lot higher, but things have changed, right? The talk about the potential 1% or 100 basis points interest rate hike by the Bank of England, that was in the case scenario where the fiscal policy or their so-called mini budget continues, which obviously we all know. On Monday, we did talk about it on Monday. It was pretty much scrapped, right? Except for the energy plan, with the energy subsidies, that's going to be up until April instead of the 2 years plan. But other than that, pretty much all of the mini budget was pretty much scrapped. Now, this changes things a lot, right? Bank of England was talking about a potential 100 basis point hikes or maybe the need to hike even more. That was on the basis if the fiscal policy or the so-called mini budget continues. This was reversed. So market right now is actually not pricing for 100 basis points hike by the Bank of England. We are looking at a potential at around 75 max by the Bank of England. Now, with the CPI number that comes out, this should indicate that the Bank of England should be hiking higher, but that's not going to be the case because the mini budget was pretty much scrapped. So we are looking at some key levels with the pound USD here. Let's talk a little bit more about pound USD, because this is pretty much in every trader's site. Anyway, let's take a look at it from a daily perspective. We did talk about this pretty much for the past 2 weeks. There was a failure at point C. That was basically a failure to maintain a position above 78.6% on the daily retracement. So that brings it down. We do have a little bit of a resistance coming in at 1.14, and this is going to be a key resistance for the cable here. So far, there hasn't been a daily close above 1.14. Right now, we're actually hovering at key support, which is at 1.12. Now, if there's a daily close below that 1.12, then we do expect further drop to the downside for the pound USD. There are a couple of spillover effects, mainly from the dollar yen, that would really kind of indicate how the dollar is actually going to perform, and that's really important on whether or not the Bank of Japan is actually, sorry, not Bank of Japan, the Japanese finance ministry, are they actually going to intervene? That's the question here. But let's take a look at the pound USD daily. Nothing much has changed from a technical perspective. This remains in a downtrend. It remains below the Ichimoku cloud, remains below 1.14, key support level below point C, which does indicate that we kind of do expect a little bit of a pullback, at least towards 1.08. If it does break below 1.12, that's about 400 pips to the downside. Anyway, let's take a look at the hourly time frame on the pound USD. Right, so the momentum for the pound USD is that intraday wise, it kind of used it up, right? It traded below the pivot level, it traded below the support 1 level. It could go to support 2, which is at around 1.1175, sorry, right? And that's still kind of the psychological barrier or psychological support for 1.12. So we definitely want to see a much clearer cut below 1.12. If you're planning to set up a swing position, I would still prefer to go short on pound USD, because the overall tone with the UK economy and financial stability, it's still up in the air in terms of whether or not the mini budget is going to be scrapped. The confirmation is actually going to be, the formal confirmation is actually going to be on the 31st. 31st? Is it 31st or 30? 31st of October, right? That's when Han, which is the new not new prime minister, new finance minister, is actually going to talk about it. Okay. So pound USD on the hourly time frame, it is a little bit too late if you want to jump in short, and I would suggest if we actually do see a little bit of a bounce from 1.12, then we do expect a little bit of a recovery, not surpassing 1.13. So this is the kind of movement I'm kind of expecting on the pound USD here, right? So it will actually need to bounce off a little bit of support. Right now, momentum still points to the downside. We are likely going to be looking for a potential retest of that support at 1.12. That's also to fill in the gap which we saw on Monday. This gap hasn't been filled, and that's basically what we expect the market to do tonight. We do expect that gap to be filled. We do expect price to potentially bounce a little bit from 1.1175 to 1.12. If it does happen, not going to be looking for a long position there, because there's going to be a lot of risk if you are going to go long on pound USD, considering that the hourly time frame is also transition below the Ichimoku cloud. So I do expect the move down to 1.12, price move back up a little bit, maybe to test 1.1250 all the way up to 1.13, which we need that confirmation from a bounce before we can actually kind of predict where that bounce is going to end. But if it does happen, if we see that bounce happen, market retrace back a little bit, then I much prefer to go short when it pull back up a little bit, right? That way you can have your stop loss there. In terms of target level, you can adjust it to 1.1. That's still going to give you a good risk to reward ratio. That would be your initial target level. We could go for 1.1050. We could go for 1.10. But ultimately, we are potentially looking for a return towards 1.08 if it does break and sustain a break below 1.12, right? For the pound USD, I would say do not rush into this. This is one of the high risk environment in the currency market right now. In fact, in pretty much any market right now, just because on how the financial stability in the UK is actually questionable at this point in time, right? So as per Monday's outlook, I still expect that push lower on the pound USD. But is it time for us to see that push lower? I think intraday wise, we kind of used up the range. Intraday wise, we're really closing in on support 2. So I do expect the gap to be filled. And then we see a little bit of profit taking. We see a little bit of a short bounce in pound USD. Once that bounce ends or slows down a little bit, that's when you want to. That's basically your cue to jump back in on pound USD. So right now, today, I wouldn't go for a short right now. It just doesn't make sense in terms of target level. Risk reward ratio doesn't look pretty. So I'm just gonna give you the illustration. If you do go short, and then if you aim for that 1.1175, which is a little bit overextended, your stop loss is going to be the same as if you were waiting for that bounce back higher on the pound USD, right? A risk reward ratio is less than half. Sorry, it's less than half. You're risking. You could potentially be risking 125 pips for a potential 60 pips gains. I don't think it's worth it. So I would actually scrap this. And if you are looking at, if you think that the market is actually going to bounce off potential support at 1.12, why can't I just go long? You can go long, but the risks in terms of the risks in the market, there's a higher chance that the pound USD could actually weaken. So if you're planning to go long and trade that bounce, the range is actually going to be small. You would be looking at a potential 50 pip stop loss for a potential maximum gain of about 70 pips. So yeah, I don't like that, and I much prefer to just wait it out for pound USD. Okay, so that's clear on the pound USD, and let's give you a little bit of an explanation why the high CPI from the UK doesn't drive the pound USD higher, because this is on a completely different scale at this point in time in terms of what the market is expecting from Bank of England. So take it slow. All right, next up that I want to talk about, it's the dollar yen. I need to quickly go over the dollar yen because this is quickly approaching 150. 150 is basically the key level that you need to watch out for. So yeah, I know a lot of you has taken some long position on the breakout earlier today above 149.30, 149.25. It is going to be a slow grind, but expect a little bit of a slowdown at around 150. The finance minister from Japan basically just confirmed it, that they're actually ready. They're on standby to take action. Now, whatever that means, are they going to be looking at volatility in the market, or are they actually going to be looking at 150 yen as the key level to intervene again? I think they'll do it, but we need to see how market actually reacts to that 150 level. If market touches 150 level and then everyone is kind of afraid that the Japanese government is actually going to intervene, then we're likely going to be seeing a little bit more of a profit taking on around 150. Okay, one thing to note here, this is noticeable on the hourly time frame. All right, so we actually did a couple of trades scenario on Monday, some of you actually jump in on this. Some of you took out that breakout. There were actually two breakouts. One, I believe, one on Tuesday and another one today. So we had two breakouts in 2 days. One is actually the break above 149. The other one is actually a break above 149.30. So both scenarios are actually pretty much filled in right now. We do expect a potential run towards 150 before we see any weakness coming up from the dollar yen. So if you have that long position from the dollar yen, you have a couple of options. You can move your stop losses. You can move it to 148.50. That would actually adjust your entry for Monday, right? At 148.50. So I would say you can start moving it up to 148.50 if you want to. This spike yesterday, there was actually a spike back down to 148.50. That was on a little bit of a scare when the Japanese government say they are on standby. So they have been on standby since yesterday. They haven't done anything. So we do expect price to continue towards 150 before we see any potential sign of intervention, right? So stop loss, if you have a position on Monday, move it up to 148.50. If you have a position yesterday, if you have a position on Tuesday, and if you have a position today on the breakout earlier today, you might want to start moving your stop losses to about 148.50, which is pretty much unchanged if you have that position on Tuesday and on the Telegram post today, right? So yeah, with the dollar yen is a little bit unique. It's actually not the US dollar that's actually gaining strength. It's actually the Japanese yen that's weaker across the board. We have pretty much a similar level in euro yen. So we have dollar yen with 150. On the euro yen is actually 148, which we'll take a look at the euro yen next, because that's something you need to watch out for as well. So with dollar yen, not looking for a short. If you're looking for a short, then you want to look for a potential failure around 150, but that short trade is likely going to be excuse me. That short trade is likely going to be short-lived, so you need to act quickly if you want to short at 150. It is going to be a very, very risky thing to do because you're going against whatever trend that exists on the dollar yen, whether it be on the hourly time frame, on the daily time frame. You are going to go against the trend with the dollar yen. So I would say right now, if you missed out on the breakout today, if you're wondering what that breakout is today, the market was a little bit flat earlier this morning. That's basically the breakout level. So a lot of you guys probably jump in on about 149.30. I posted it today on Telegram. So if you guys got it, great. If not, then yeah, nothing much you can do with the dollar yen. This is going to be a slow grind. And if you think, you want to move your stop losses to your break-even level, at this point in time, you are given that option. You can move your stop losses a little bit. Safest, the smallest stop loss you can have is probably around 149. So that's kind of the stop loss that you want to have with the dollar yen. If you trade it on Monday, on Monday's breakout, then your stop loss would be at 148.50, which is pretty much your entry point. If you trade it on the breakout yesterday, you can start moving your stop losses to about 149. That's going to minimize your risk to about 10 pips. So I think that's a good idea, considering how close we are to about 150. The spike on concerns of intervention that has already happened yesterday, so I don't think the market is likely going to see that spike. But just in case, if the market does spike, it will likely move to the upside first to about 150, and then people get scared. That's when it could cause a little bit of a spike. The spike yesterday was also supported by a stimulus package that was announced by the Japanese government. So yeah, that's pretty much it. So dollar yen, keep a close eye on this. I wouldn't be going short on dollar yen. I wouldn't be looking for a new position at this point in time. If you missed out today's trade, which is in the morning, then forget about it. It's a little bit too risky for you to jump back into the market right now, because if you do go long, then your stop loss would be about 149. In terms of your target level, you're still going to be limited by 150. So risk reward ratio doesn't make sense. You are going to be aiming for 35 pips, risking 65, and I don't like that. So if you don't have the breakout over here, then don't trade the dollar yen today. So the ship has pretty much sailed. If you trade the breakout this morning, then that's awesome news. Just keep an eye out. I think this is slowly going to track and test 150. It might be just a short period of time when it's at 150, because I think a lot of people are actually going to be scared that the Japanese government is actually going to intervene with the dollar yen. All right, so we'll see what happens. Once it gets to 150, either it breaks out significantly to the upside and then the intervention comes in, or people will actually get out from the position at 150 and don't really want to trigger that intervention. So it's a little bit unknown, but in any case, I think we are slowly grinding towards that 150. Okay, what's my view on the Aussie yen? Before the Aussie yen, let's take a look at the Euro yen. Also sent out a warning with the Euro yen, that 148 was a key level to watch out for. Anyone that took the trade on Monday would have gotten out pretty much at around 146.70, 146.50, 146.75. So you guys that did this trade, maybe it goes even higher. If you target 147, that's completely fine. You should be out from your trade with the Euro yen, right? So I'm assuming this trade is pretty much done and dusted. So I'm just going to move it aside. So Monday's session got this. So that's a really good 200 pips to the upside. All right. So what do we do with now? Is there an opportunity with the Euro yen at this point in time? So let's take a closer look with the Euro yen. This, if I zoom in a little bit, this is right now above the Ichimoku cloud. We pulled back to the Ichimoku cloud. We are looking at a potential bounce as long as it doesn't close below 146. So this 146 is going to be a key level to watch out for. This is going to apply on the hourly time frame. As long as we don't have an hourly close below 146, there's a potential for this one to actually bounce back up higher and progress towards 147.50 and then 148. That's basically the ultimate level to watch out for with Euro yen. 148 is also in line with the daily pivot in terms of resistance. That's going to be resistance 2 when the market switches tomorrow, and if price is trading above 146.50, then 148 will actually be resistance 1, and your pivot is going to be around 147 tomorrow. That's pretty much based on the calculation if we take a look at the current range today, right? So ultimately for the Euro yen, if we do expect a push towards 150 on the dollar yen, then we do expect a potential for the Euro yen to actually test 148 before any intervention comes in from Bank of Japan. So what's that to say with Euro yen? Right now, if you are thinking of going long on the Euro yen, it's probably a little bit premature, but once the stochastic crosses over, price is above 146. That's I like a long position as long as it's above the Ichimoku cloud. In terms of stop losses, we don't have a new low, then you want to have it just slightly below 146. And ultimately for target, you can go for 147.50. That's already more than that's going to be 1 to 2 risk to reward ratio. And if you're brave enough, you want to go for that extra 50 pips towards 148. That's going to give you about 1 to 3 risk to reward ratio. So I think Euro yen, it's something that it could be a great opportunity if we take a look at potential yen weakness. All right, and as I say, it's not the US dollar that's actually gaining strength, it's just the overall yen weakness at this point in time. All right, let's take a look at the Aussie yen next. All right, Aussie yen is a little bit unique, and let me just bring you the daily time frame, because we have this trade on the Aussie yen on Monday. Initial stop loss was at 91. Right now, that stop loss can actually be adjusted to just around 92. So I'm still expecting a little bit of a push higher at this point in time, at least towards 95. So 95 is kind of like the minimum go-to, but there are rooms for this one to go towards 96 and 97 at this time in time. At this point in time, I'm leaving 95 and 96. But this is the overall swing position that was pretty much initiated on Monday. We did talk about this on Monday's webinar. Intraday wise, you do have a little bit of resistance coming in at about 94.50, so I'm going to do that. 94.50. Right, that's going to be your intraday cap on the Aussie Japanese yen. So if you have that long position there, you're also going to be aiming for that 94.50. I would say, just if you want to go for that 94.50, you can actually start adjusting your stop losses to break even, or maybe lock in a little bit towards 93.50. Okay, so if you have that long position and you want to keep it safe, then you could move your stop loss to 93 or 93. Yeah, let's say about 10 pips below 93.50. All right, so that looks good. If you're thinking of going long at this point in time, the momentum still drives to the downside, so I don't think we are actually going to be looking at a potential trade today. We either need to see this crosses up, then we could see that move towards 94.50, 95 on the Aussie yen. But my view on the Aussie yen strictly remains strong to the upside. If you're planning for an entry, that's actually going to be an entry. That would be an hourly close above 94.50, and that would actually break this high that was rejected at resistance 1 yesterday. So I'm just going to run it up to about 94.50. If you're planning to go long, make sure it does close above 94.50. Initial stop loss, you can have it below 94. You want it to be a little bit safer, you can have it about 93.40. Right, in terms of target level, ultimately we are going to be looking at 96. So I think there's an opportunity to scale in, but if you were there on Monday when we did our webinar, then you guys should already have a running position on the Aussie yen. If you're looking for a new position on the Aussie yen and you want to get on the train, make sure you wait for an hourly close above 94.50 at least, and then you can target 96 if you want to. Have your stop loss at 93.50, 93.40. You're risking about 115 pips for a potential 140 pips. It's likely above 1-to-1 risk to reward ratio, but it still makes sense. And if you want to start adjusting your previous positions, then stick to the daily target, daily swings that we have here on the Aussie yen. So if you take the swing trade, then I think it's time for you to start moving your stop losses to 92. So move it up from 91 to 92 yen, and then you can hold it, let it run. We do have a potential target towards 96 on the Aussie yen. Okay. There's news yesterday about industrial production above expectation that may cause the dollar index stronger today. So gold breaks 1640. Okay, with gold, it's not really correlated to industrial production anyway, but let's take a look at gold. And my view on gold hasn't changed. I do expect a little bit more of a choppiness here. We're not really quite done in terms of how far gold can actually go. So yeah, we do have that resistance at 1660. That's pretty much has been capping it. I think we did take an hourly look on gold on Monday, so that's pretty much in line. We have that rejection from Ichimoku Cloud. We can clear off this thing here. So Canadian inflation number just came in a little bit higher, 6.9 versus 6.8 expectation. U.S. building permits was at 1.564. Consensus was 1.53. Sorry. Right, the housing number that just got released. Let me just go through it. Building permits was up 1.564. So there was actually a little bit of a scare on the housing starts and building permits in the US. If the number came in lower than what the market's expecting right now, it's just in right now, there was actually going to be a concern for a recession. So, right, with gold, I don't expect any gains at all. We did talk about gold a lot, and the overall tone, as long as the FOMC is going to be hiking interest rate, it's not going to be good for gold, right? Intraday wise for gold, we have reached 127.2. So if you were on Monday, and we did talk about this potential drop on the gold here, you should be getting out from your position. I don't have a position in gold, and I haven't been trading gold for the past 2 years. Just for a disclaimer, you can ask for my opinion on gold, but I don't trade gold, and I don't like trading gold. Okay. But if you have that short position with gold, you might want to scale out a little bit. This is right at around 127.2%. You could extend this a little bit lower. We might see a little bit of a touchdown towards 161.8, which is around 1622, which should be about now with the housing numbers that just got released in the US. Anyway, let's quickly jump into Pound USD, see if we see that weakness as well. We are looking at that weakness on the Pound USD. Euro USD, a little bit complicated. Let me just get rid of a lot of this stuff here. Leaving those previous trades down just for reference sake. 97.75 is going to be key. Again, with this one, either we see a quick drop to the downside and 127.2% Fibonacci extension on the euro, but right now we are around 61.8. I do expect a little bit of support to come in at about 78.6 to 100%. So this is going to be a support area. If you are short on Euro USD, which I am still short, by the way, and I have been short since let me bring it up. So yeah, if you guys are curious about the positions that I have, that's going to be on screen. I've been short the Euro USD average fill around 0.999, so pretty much at parity. On Pound USD, the average fill for me is at 1.1463, so still holding it. And this is the other position that I have, which is the dollar yen from 144. Okay, so Euro USD, do expect a little bit of support to come in around 97.50 to 97. That's exactly 50 pips, and that support that we do expect is basically going to encompass the support from last Friday. So I do expect a potential bounce. Similar scenario with the Pound USD. I do expect this to happen, fail to overcome Ichimoku cloud before we actually see further progression to the downside for the Euro USD. So I'm not going to be adding any position onto the Euro USD. I already have enough positions for the Euro USD. But if you're looking for a position on the Euro USD and you don't have a short position on the Euro USD, if you do, then you would probably got in short around here, and your stop loss would be there, and you should be getting out right now. Okay, that's enough. But if you don't have a position and if you're looking for a position, then I actually want to see a failure at around 98 cents. That way you can have your stop loss pretty much at around 98.75. In terms of target level, you could be targeting 96.50 down towards 96. Okay, so that's a lot of room. So you could go for a 200 pips target or maybe about 150 pips on the Euro USD, but you need to wait if you don't have a position on the Euro USD. So that's basically two different trades. This is one if you did take a trade on the breakout today, this morning, just like on the dollar yen. There was a break pretty much around here, right? If you did take that trade, then you should be planning to get out maybe around 97.50 to about 97. Again, we'll see what the market does, but stop loss unadjusted pretty much at around 98.75. Okay, that's if you have a trade today. If you're waiting for a trade, then you need to wait for this second one here, which is this one. Okay, so don't rush into things on the Euro USD. Either you have a position today. It's not time to basically just randomly jump in. Either you have a short position on the pound USD already up and running. Either you have a Euro USD position up and running. Either you have a dollar yen position up and running. The only opportunity that I see visible is basically on the Aussie yen and the Euro yen. That's pretty much it. My view on the pound USD, that's the first thing that we talk about. If you want a quick recap, you can go back to the pound USD later on. But my view is that we do expect a little bit of a test towards 1.12, expect a little bit of support, bounce back up a little bit. As long as it doesn't exceed 1.13, then I'm looking for an opportunity to go short on the pound USD. Okay? Right. Next up, it's the dollar CAD. Let's take a look at dollar CAD. Okay. So key level dollar CAD pretty much stands remains the same. On Monday, we did expect a little bit of resistance coming in at 1.38. By the way, if you're questioning, how do I get into that Monday session? Join the Telegram channel that I actually manage, and we actually do run sessions on Monday. It's not primarily going to be in English, but if you ask questions in English, I will be answering those questions in English as well. Okay. So with the dollar CAD, we did establish a little bit of resistance coming in at 1.38. Then next up is 1.39. But if you want to know what it is, that's basically it from here. So we got 1.38. The overall momentum remains to the downside. So again, as I say, with the dollar yen, it's not the dollar that's actually getting stronger. The dollar is actually correcting itself right now. So in terms of dollar CAD, this is going to be a bit tough because price is going to be in the Ichimoku cloud. Okay, if you missed out last Friday's talk about Ichimoku cloud, jump in and view that video, because we are going to be doing the second part for the Ichimoku Kinko Hill on Friday, so you don't want to miss out on that. Alright, view on the dollar CAD is this. We have a little bit of a resistance coming in at 1.38. Right now, price is actually moving back inside the Ichimoku cloud, which is a no-go for me. But if you're thinking, you know what, should I be going short on dollar Canadian? If you're thinking of going short on the dollar Canadian, make sure your stop losses are above 1.38. Okay? Is it time to go in short for dollar Canadian? Let me just remind you, we actually don't have a clear fib to draw against right now. Okay, so we cannot actually draw this fib, we cannot actually draw that fib because of that fall pretty much 4 hours ago. So right now it's going to be a little bit tough. We can take the 4 hourly fib, which is going to be this one, but really doesn't mean anything. So momentum is actually flat. Prices within the Ichimoku cloud. I actually wouldn't want to touch dollar CAD right now at this point in time. Just strategy wise, it's giving me no reason. But if you're thinking, you know what, it fails at 1.38, then by all means, if you plan to go short, feel free to go short, but make sure your stop losses are at least 1.3810. In terms of target level, you should be looking at, potentially 1.3725 to about 1.37. Risk reward ratio is going to be about 1 to 1. Range is 40 risk, 40 gain. As I said, I wouldn't want to be touching the dollar CAD at this point in time. You know why? Because despite the correction that's been going on with the US dollar right now, I still think it's a little bit suicidal going against the dollar because the overall strength of the US dollar right now, from a couple of point of view. One, as a safe haven, you know what? That's the currency of choice. It's not gold. It's not yen, right? It's the dollar. Any risk aversion in the market, that's going to drive the dollar up. And with the FOMC being so hawkish, the US economy is actually really, really strong. Just giving me no reason to attempt to go short dollar. To me, the risk of going short the dollar is just a lot higher. Okay, and I'm going to show it to you right now. The dollar index has actually been falling down a little bit. Okay, we are down to 112. It did push down a little bit lower, but anyway, this is a little bit flat. We're not seeing anything driven in the dollar index. Now, this gives you a good indication. It does mean that the Euro USD, the Pound USD, the Aussie USD is actually pretty stable right now, right? So the dollar yen gains, as you can see, it was slowly slowing down. It's actually slowing down, and the drive on the yen side is actually the yen itself that's getting weaker. It's not really the dollar strength at this point in time. Okay, so that's the dollar index. And next thing I want to bring up is actually the 10-year Treasury yield. This has pushed higher. That was a view that was actually talk in the market today. If the housing data that just got released from the US was actually weaker, then we do expect the yield to actually fall down. So the yield is actually up right now. I believe it's at 410, yeah, about 4.1%. And this is really important because if we take a look at the yield, the US dollar is correcting itself while the yields are actually going up. It should be that the US dollar gains as the yield gains, right? So what we're looking at is whatever the US dollar is doing right now this week, it's actually just resetting the momentum. It's actually not really dropping significantly at all. In comparison to what they gain, the pullback is actually really short for the US dollar. 10-year Treasury yield is up. The short-term view, which is the 2-year Treasury yield, this is also up. It's above 4.5%. So that gives you an indication, the US is not quite done yet, the US dollar. So don't take the weakness, which I've warned since the beginning of October. Don't take that weakness as a sign that the US dollar is actually going to reverse whatever it's doing. It's not. And it's unlikely to do that, considering that the FOMC still plans to hike by 75 in November and 75 in December. Dollar CAD mostly buy. Dollar CAD, I wouldn't be doing anything. Really, I don't want to be doing anything, right? I don't like going short. Price is within the Ichimoku cloud, and to me, I stick by my rules. That helped me trade for the past 15 years. Consistently. Anything inside the Ichimoku cloud is a no-go for me. So yeah, you can have your opinion, I can have my opinion, and my opinion with the dollar CAD is I don't want to go short against the US dollar. So I don't like going short dollar Canadian. If you want to go long dollar Canadian, then wait for a break above 1.38. Then you can actually go for long. Make sure your stop losses are pretty much about 1.3725. Then you could be targeting that key resistance at 1.39, right? That's still going to give you a much better risk to reward ratio and a much better target range because you can adjust your stop losses like that. And I much prefer this scenario where it actually breaks above 1.38. So yeah. Gold, we actually did talk about gold. So if you missed out, because we need to cover a lot of other stuff as well. If you missed out, you can rewind about 15 minutes ago. I think we did talk about gold in 15 minutes. Okay. So let me go through the questions. Not a lot of questions today, yeah? So we're Aussie yen. That's pretty much done. Gold, pretty much done. Pound USD is done. Dollar CAD is done. Okay. Right. Next up, it's the futures, just to give you guys a little bit of a view on what the future is. Let me just check which futures chart that I use. Okay, so this one, that's pretty much done. We break above 30,500. Do we expect a little bit of a pull to the upside? Maybe about 31,000, but momentum slowing down. Right, so here we go. Right now, because it breaks above 30,500 on the daily, yesterday, right now, today is actually being tested. So if today closes above 30,500, then we're likely going to be seeing that move towards 31,000 on the US 30. What does that translate for an intraday trade? Basically, that 30,500 on the hourly time frame is going to be above the Ichimoku cloud. So if you are planning to go long, make sure price transition above the Ichimoku cloud. Adjust your stop loss to whatever low that's being created. At this point in time, you might want to have it about 30,000. You can be targeting 31,000. Risk reward ratio is going to be close to 1-to-1. But make sure price is able to get back about 30,500. Other than that, no go on the hourly time frame. This is within the Ichimoku cloud. I just don't like it if it's within the Ichimoku cloud, and I have a very strict rule for that, right? So Nasdaq is also within the Ichimoku cloud. So if you're looking for an intraday trade on the equity futures, today is probably not your day. Can I please talk about cup and handle pattern? Okay. I don't think we have a good example on the cup and handle pattern, but let me see if I can pick something up. What creates a cup and handle pattern in recent times? It should be the dollar yen. So let's scroll back and see if we do have that patterns. No, not seeing it. Okay. The cup and handle pattern basically, it's a sideways market condition with a quick drop to the downside, and then this happens, right? And the break is actually going to be a break on that, pretty much like that. Okay. Let me give you a good advice on cup and handle. One, it takes a very long time to form. Two, it's not good for short-term traders. If you're trading based on the daily time frame, that's completely fine. If you base your trade on the hourly time frame, that's still fine. If you trade it on a 15-minute time frame, whatever, that's going to be rubbish because what you're looking at is noise. Now, with cup and handle patterns, it is one of the rarer patterns. It takes time to develop because it takes time to develop. And that's going to give you a huge stop loss. Okay? Because the stop loss on this breakout is actually going to be whatever low that cup of bowl is, pretty much. So, let's say it does break to the upside, then your stop losses are actually going to be below that level. Just an illustration. That's going to give you a huge stop loss in the market. It's not suitable for traders. It's awesome for investors, but yeah, let me just warn you, cup and handles are not for everyone. It's a little bit obscure at this point in time. It's okay if you trade stocks. It's not okay if you trade currencies. The volatility in currency market is just too big. But if you see that formation and you are willing to take that huge of a risk, then yeah, by all means, go ahead. If ECB raises 75 basis points, will it bring the Euro USD to parity level? All right. Let's talk Euro USD. Will it take it to parity level? I don't think so. Here's the thing. With the ECB, in terms of the expectation of them hiking interest rate right now, it's a different case study from what's going on in the UK, but we did talk about the UK earlier when we started, right? Why is the CPI up and the UK, the Bank of England is going to be hiking rates, but why is the pound USD not really gaining any strength or whatever on the back of that stronger CPI numbers? Because things have changed a little bit. Market was expecting 100, they're okay with 75. That 100 is going to happen if the fiscal policy goes on. Okay, that's one. With the Eurozone, right now, in terms of the global market, it's not really a huge surprise anymore if central banks hikes by 50 basis points or 75 basis points. Okay, it's already been priced into the market. If they do hike by 75 basis points, let me rewind and remind you that even when the first time the Euro USD, the ECB hikes interest rate on the Euro USD, the initial reaction wasn't even positive for it. So the interest rate hikes on the ECB side, that's really driven because there was a high inflation. That's pretty much it. So whatever they're doing right now is not really a surprise to the market. And the central banks around the world, major central banks are doing 50-75. If the ECB hikes by 100 basis points, then that's going to be a surprise to the upside. Then, yeah, it could take it to $1. That's simple as that. But, given the current situation, if the ECB hikes by 75 basis points, it's going to be tough to take it back to parity at this point in time. Okay, we do have a little bit of resistance at around 99 cents. So at, a closer date, closer to the ECB rate hike, if price is above 99 cents, then yeah. But if price is below 98.50, 98, it's going to be a little bit tough for the ECB, for the Euro USD to actually go back to parity. We haven't talked about pound USD. We did talk about Aussie yen, right? Is there a short opportunity on the Aussie yen? This is what we have on the Aussie yen. This was discussed on Monday. So that's on a swing trade. This is the Aussie yen on the hourly time frame. Is there an opportunity for a short? No. Even if there is, we need to break below 93.50. Okay, so a short opportunity will only appear if price breaks below 93.50. And that will transition below the Ichimoku cloud. But until that happens, I'm not looking at a short. I'm actually looking for a potential continuation to the upside. If you don't have a position on the Aussie yen, wait until it closes above 94.50. Then look for a long towards 96. But most of you took that trade on Monday for the Aussie yen. You probably jump in around 92.50. If you adjust it to a swing trade, you should move your stop loss from 91 to 92. And no, I'm not looking for a short opportunity on the Aussie yen at this point in time. The daily still points to the upside. We are likely going to be testing Ichimoku cloud. We are likely going to be testing 96 for the Aussie yen. Hi, long life. I'm doing great. How are you doing? Yeah, sterling yen. We will touch base on sterling yen. Yeah, no, it's not. Someone was asking about pound USD. Anyway, let's go to sterling yen. All right. Done. So it is going to be a little bit choppy. In terms of support, I will leave 150 to 160. I will remove 162.50. I will take away 164. It's quite meaningless at this point in time. All right. Sterling yen. We got 150 on the dollar yen. We've got 148 on the euro yen. For sterling yen, I think it's going to be about 170. We are done for sterling yen. At least from the daily perspective, I think we are quite done on the sterling yen. Fibonacci extension should be very close to about 127.2%. Nope, still around 174. Okay. Let's go on to the sterling yen for the hourly time frame, see what we have. Yeah, I'm not liking sterling yen at all. Unlike the euro yen or the Aussie yen, where it's kind of a little bit clear cut. On the sterling yen, I can clear this one, it's not a big deal. On the sterling yen, you see what price is actually doing right now? It's at the very end, and there's actually a resistance trend line. And price is actually flattening out. So this cannot be categorized as a descending triangle. Okay, so make sure you guys are looking at this right. Okay, we do not classify this as the descending triangle because it's happening in an uptrend. We cannot call this a descending channel as well. We cannot call this as a flag either. So with the overall tone here, we do see a little bit of support coming in at around 168. So key support level, if you want to round it up, I'm happy with 167.90, but if you do want to round it out, then it will be at 168. Okay, so it doesn't change much. If you are planning to trade the sterling yen, do I expect a little bit of a move higher? Yes. On the daily, we do expect 170 as that key resistance level, similar to 148 and 150. So if you are planning to trade on the sterling yen, I would say wait until price transition back above the Ishimoku cloud, ideally break above this resistance trend line, then you can have your stop loss, maybe slightly below 168, go for 170. If it does break above 170, no intervention from the no intervention from Japan. And the dollar yen pushes beyond 150, then it will actually take the euro yen above 148. It will take the sterling yen a little bit higher towards 100, maybe towards 174. The only thing with sterling at this point in time is that I do not trust sterling. I do not trust sterling as being stable. I do not trust that we have any fundamental goodness in sterling. Maybe we'll see that on the 31st of this month, but I'm just not seeing anything good coming out from sterling. I don't see any good strong fundamental base for it. In terms of the technicals, if we take a look at the pound USD, it's still capped by 1.14. It's still below point C. Overall, I'm not really seeing any strength coming in from sterling. So to me, sterling yen, this is a little bit weird, but if we do have that break above that resistance trend line, maybe you can go for that 170. But to me, I don't think it's worth it. I think that's a much better option with the euro yen. That's a much better option with the Aussie yen. Now, with the Aussie, I haven't talked about this on the Telegram. I actually didn't post it up, but I want to talk a little bit about the Rba Meeting Minutes. If you guys didn't know, the RBA is the first of the more advanced economies that starts reducing the pace of their interest rate hike. They were expected to hike by 50 basis points. They only hiked by 25 basis points. And if you read through the meeting minutes, this is actually really unique. Because on the meeting minutes, they actually outline the two possible scenario if they hike by 50 or if they hike by 25. And the reason they go by 25, this is pretty much a long monetary policy meeting minutes. But the reason why they go for that 25 basis point and they're willing to take that risk is because of the fundamental delay that whatever they're doing right now, it's not going to take effect in the market immediately. So they do expect inflation to continue to go up. They are expected to continue to hike rates, and they will continue to hike rates, but maybe at a slower pace, because the concern with what the RBA is concerned about is that if they hike too fast, too quickly, in 1 year's time, it's actually going to choke the economy in Australia. Okay, so this is a new perspective that, we haven't seen anything come out from other central banks. Okay, but if you want to have a read on it, I'm actually going to post it on the Telegram channel right now. If you guys want to read it, it's a good read, and there's a very good explanation on the reason why they hiked 25 instead of 50, but they gave out both scenarios anyway. How about hedging strategy with 1 to 2 risk reward ratio? Define or give me an explanation on the hedging strategy. All right, last one for today. We'll take a look at the euro pound. A little bit of a mess with the euro pound. Let me ask Team Octa, Natalie, if you can, do you still have the Telegram link to join my Telegram? If we could have that posted on chat so newcomers can actually join in. All right, while we wait for that, let's go to euro pound. It's pretty much done. Okay, euro pound, I'm quite okay. We already see that bounce off the Ichimoku cloud. In terms of daily, do I expect further gain? Yeah, at this point in time, we are still being capped by the weekly pivot at 87.20, but ultimately we do set key resistance coming at 88, and then beyond 88 it's going to be 90. Momentum is great. I think this is starting to come out, the oversold condition. No divergence noted. I don't see any divergence. It's not going to be smooth sailing towards like 90 immediately. This is likely going to be, if it does break above 87, it'll be at 88, test 87, and then slowly drag on. Hopefully, it's actually going to be quick enough to actually move away from the Ichimoku cloud. Otherwise, it's actually going to be trapped within the Ichimoku cloud around 88. Intraday-wise, on the euro pound, we've got a little bit of resistance at previous support 87.25 and 87. Euro pound intraday wise, I would trade the break to the upside above 87.25. So right now what we're looking at, we can actually cage this. Right? So we can actually look at that potential scenario here. I don't want to take that trade if it breaks that range to the downside, because it will go inside the Ichimoku cloud. I prefer for this one to break above 87.25. Then I would actually prefer to go long above 87.25. Having my stop loss maybe around 86.75. But ultimately, I still do to target that move higher. I see a potential for this one to push back up a little bit higher, because if we take a look at the much longer time frame, in terms of its fib, it will be like this. You could actually be targeting towards 78.6, right? That's initial. Or you could actually be targeting around 88, actually. So yeah. I like scenario number 2. I do not like this, because if there's a break to the downside on the range, it will take it down to Ichimoku cloud, and I just won't do anything with that, and I don't like that short sell scenario. Look, I might be a little bit biased, but I'm not sure the new finance minister from the UK, it calms the market down a little bit. But it takes a lot to unwind the damage that's been done by Quasi. So it's tough. It's hard to trust them. I know they're aiming for financial stability, but Bank of England, there's an issue with Bank of England as well. When we have a clash between fiscal and monetary policy, I just don't like where it's going. To me, it's still unstable. and I just don't see any stability comes into sterling until the 31st October, where they announce the new budget. That's pretty much it. Sharice Nasim, US 30 has actually been analyzed, so if you want to rewind about 15-20 minutes ago, we did actually talk about that. Alright, I think that's all the time we have for open long and short position in one pair. I don't like hedging like that. I like to hedge with different instruments, because to me, I don't see the point if you open a short position in the same currencies. Might as well just close out that position instead of locking it like that. The problem is actually going to be the same, because when you want to release that hedge, which one are you going to release? So might as well just start a new position. That's my point of view. But when we talk about correlation in the market, we did talk about this. We built a portfolio. We talk about hedging. We talk about diversification through building a portfolio. I think that's the right way to look at hedging. If you lock it like that, you're not really doing any benefits to yourself. Okay. All right, guys. So I think that's all time that we have for tonight. Don't forget that we are actually doing the second part of the Ichimoku Kinko here. We will talk about price correlation in terms of Tenkan-sen, Kijun-sen, and stuff like that, how to actually use them. And we'll talk a little bit about several strategies that you can actually use with Ichimoku Kinko here. So don't forget, that's going to be on Friday. You missed out Ichimoku Kinko here on Friday. Don't worry. The recording is there on Octa FX channel. Look up last Friday. It was on the 14th of October. We did the first part of the Ichimoku Kinko here. Alright. Thank you all. Have a great day ahead. Good luck with your trades, and I'll see you Friday. Okay?